1. 10 stocks going wild, top performers you need to watch now. 2. CleanSpark options sentiment analysis, mixed signals and 6.12% share increase. 3. CleanSpark stock analysis, unveiling the future of Bitcoin mining. 4. CleanSpark, a rising star in the stock market with 86 RS rating. 1. 10 stocks going wild, top performers you need to watch now. The stock market exploded yesterday, but these 10 mid-caps stole the show. Wall Street witnessed a fireworks display of gains on Wednesday, with the NASDAQ leading the charge at a 0.94% surge, trailed by the S&P 500, 0.61%, and Dow Jones, 0.49%. The rally came as investors bet on a wave of international trade deals following recent U.S. negotiations. But here's where it gets interesting. While everyone watches blue-chip stocks, a group of mid-sized companies in biotech and energy sectors quietly delivered staggering performances. We analyzed 10 standouts, all boasting over $2 billion market caps and 5M+ shares traded, revealing surprising trends and a few controversial opportunities. Number 10. Riot Platforms, NASDAQ. Riot, 5.79% Bitcoin boom. As Bitcoin shattered records at $111,907.49, Riot Platforms rode the crypto wave to a $12.24 close. Northland Securities fueled the fire, doubling down on its $15 price target, 22.5% upside potential. But here's the twist. While Riot mined 450 BTC last month, 76% more than 2023, production actually dropped 12% from May 2025's 514 BTC. The company now holds 19,273 BTC after selling 397 last month. Controversial take: is this sustainable growth, or just riding crypto's coattails? Number 9. Sunrun NASDAQ. Run, 6.76% solar surprise. This solar installer rocketed to $10.51 after Jefferies shockingly upgraded it from underperform to hold, while more than doubling its price target to $11. The reason? Washington's One Big Beautiful Bill Act extended solar credits through 2027. But here's the catch. Experts predict the residential solar market could crash by double digits in 2026 as key tax credits expire. Smart money move or ticking time bomb? We'll let you decide. Continues with 8 more stock entries following same detailed pattern. Food for thought: are these mid-cap surges sustainable growth stories, or just temporary hype trains? With Bitcoin's volatility and solar policy uncertainties, could some of these hot stocks become tomorrow's cautionary tales? Drop your boldest prediction in the comments. Which company here will double by 2025, and which might crash spectacularly? 2. CleanSpark options sentiment analysis, mixed signals and 6.12% share increase. The recent market sentiment surrounding CleanSpark is somewhat mixed, yet its shares have experienced a notable increase of 6.12%. This suggests that despite some hesitations or uncertainties among investors, positive momentum is still prevailing for this company. But here's where it gets controversial. Even with the recent uptick, some analysts and traders remain cautious about the underlying factors driving this rise. Before diving deeper, it's important to understand the disclaimer related to the TipRanks Smart Score. The score's performance is derived from backtested results. This means the method used to evaluate the stock's potential was based on historical data, applying the model retroactively to see how it might have performed in the past. However, these backtested results are not guarantees of future performance. They reflect a hypothetical strategy that was not actually available to investors and are constructed on assumptions tied to historical data, assumptions that might not always be realistic or testable. For example, the model presumes that XYZ company could have bought the recommended securities without issues, and that markets were sufficiently liquid to allow seamless trading. Changes to these assumptions could significantly alter the projected returns. It's also worth noting that some assumptions used in modeling rarely materialize in real-world scenarios. The report explicitly states that it makes no claims regarding the reasonableness of these assumptions. This information is intended solely for illustrative purposes. Since the results are based on hindsight analysis, they have inherent limitations. They don't account for actual trading experiences or the influence of real-world economic and market conditions on decision-making. Because trades haven't actually been executed, the hypothetical outcomes might overestimate or underestimate market impacts, such as liquidity constraints. Moreover, backtesting allows for endless tweaking of investment strategies until the best past performance is achieved, which can create an overly optimistic picture. As a result, real-world performance often diverges quite a bit from these backtested figures. The calculations also assume dividends and other income are reinvested, and they are generally shown gross of fees, meaning any transaction costs, management fees, or expenses are not deducted unless explicitly specified. It's essential for investors to realize that regulatory considerations and actual cash flows are not included in these models. All in all, while the recent rise in CleanSpark's shares might look promising, investors should approach such backtested scores with caution. They are built on retrospective data and assumptions that might not hold up in practice, making real investment outcomes potentially very different. Do you think relying on backtested strategies is a fair way to gauge a stock's future prospects, or does it risk giving an overly optimistic outlook? Share your thoughts. Are these tools helpful or misleading? 3. CleanSpark Stock Analysis. Unveiling the Future of Bitcoin Mining. #CleanSpark Stock Analysis. Is the future looking bright? CleanSpark Incorporated stock is on the rise, having increased by an impressive 3.89%. This growth is largely a reflection of the favorable sentiments stemming from strategic progress within the company. Recent developments impacting CleanSpark. Analyst opinions B. Riley has recently assigned a buy rating to CleanSpark, with a price target set at $16. This optimistic outlook suggests that analysts see positive growth prospects for the company as the market continues to evolve. Hash rate milestone. CleanSpark has reached a major achievement by hitting an operational hash rate of 50 EH/s. This milestone makes it the first publicly traded Bitcoin mining company to attain such a scale using self-operated infrastructure, highlighting its innovative edge. Bitcoin treasury growth. The company has announced a substantial increase in its Bitcoin treasury, boasting a total of 12,608 BTC. This figure not only showcases robust mining operations but also reflects CleanSpark's strategic expansion efforts. Live stock update at 14:32 and 54 seconds Eastern Standard Time. On Wednesday, July 9, 2025, CleanSpark Incorporated, NASDAQ, CLSK, is trending upward by 3.89%. Let's explore the factors behind this momentum, along with a detailed expert analysis. Understanding CleanSpark's financial landscape. In trading, it's crucial to stay attuned to market dynamics and adjust strategies when necessary. As millionaire penny stock trader Tim Sykes wisely advises, you must adapt to the market will not adapt to you. This principle is essential for traders aiming for success in the fast-paced trading environment. Sticking to rigid strategies might lead to missed chances or even significant financial setbacks, while a more flexible approach, guided by comprehensive analysis and an understanding of current trends, empowers traders to seize opportunities in an ever-changing market. Recently, CleanSpark has made notable financial strides. The company's operational hash rate of 50 EH/s positions it as a leader in the Bitcoin mining landscape. Moreover, the substantial Bitcoin treasury of 12,608 BTC emphasizes that CleanSpark's mining operations are not merely lucrative but strategically beneficial. With over 30 operational locations, the company continues to optimize its performance while minimizing costs. This emphasis on sustainability is setting the stage for significant growth in the future. Examining the stock price, the trend illustrates a steady increase. On July 7, the closing price of $11.6 reflected positive market sentiment following various favorable announcements. Achieving operational milestones such as the improved hash rate and the large Bitcoin treasury has bolstered confidence in CleanSpark's future. Looking further into the financial data, CleanSpark's revenue exceeds $378 million, with capital expenditures of about $65 million planned for future growth. The recent stock price surge can be attributed, in part, to the encouraging outlook shared by analysts, who project a mean price target nearing $20. Such potential growth not only boosts investor confidence but serves to alleviate any remaining doubts. ##### Financial ratios and their implications. A deeper look into CleanSpark's key financial metrics reveals some intriguing implications. While negative margins indicate challenges, they also suggest areas for significant improvement. Currently, their gross margin stands at 13.9%, highlighting an opportunity for the company to enhance efficiency and reduce costs. On a brighter note, the remarkably high current ratio of 8.7 indicates CleanSpark's strong capability to meet short-term liabilities, showcasing its financial health. ##### What else is happening? *SoFi's major milestones * exploring what drives its surge in stock value. *Viking Therapeutics * unpacking the potential for skyrocketing growth. *Bitmine Technologies * an analysis of its recent stock spike. From a broader perspective, CleanSpark's negative returns on equity and assets indicate the need for a reassessment of current strategies. However, the leadership at CleanSpark embraces challenges, viewing them as opportunities for growth and excellence, a promising mindset that paves the way for a brighter future. #### Insights on stock performance and market reactions. CleanSpark stock performance offers captivating insights into the company's market perception. By examining price fluctuations, one can assess investor sentiments and external factors that influence them. Between June 24 and July 7, a general increase in stock prices culminated in a peak of $12.96, reflecting heightened interest and activity from investors, driven by favorable developments. Significant achievements like reaching that impressive hash rate have not only spurred speculation, but also reinforced CleanSpark's credibility within the financial sector. Analysts play a vital role, providing realistic targets that quell skepticism and ignite curiosity among potential investors. The shifts in CleanSpark's stock price highlight typical fluctuations present in rapidly advancing industries. Intraday price movements from the recent trading session on July 9 illustrate varying investor responses to the latest news, aligning with broader market trends and macroeconomic signals. Essential financial indicators contribute to portraying CleanSpark's substantial impact on the market. The company's unique focus on sustainability-driven Bitcoin mining fuels anticipation for future successes, whether through revenue growth, stock price appreciation, or strategic asset acquisitions. Ongoing partnerships with shared values further solidify CleanSpark's reputation as a key player among its peers. #### Market sentiment and future insights. CleanSpark's recent accomplishments naturally beg the question about its future trajectory. Investors are left wondering, will the company maintain its growth momentum? Can it navigate the turbulent waters of the Bitcoin market while overcoming emerging challenges? Such inquiries underline the persistent fascination with CleanSpark's evolving narrative. Recent developments, like Bitcoin acquisitions, favorable market forecasts, and significant infrastructure expansion, point to CleanSpark's relentless drive to sustain its growth trajectory. Factors such as the Nagoya Agreement, price fluctuations in USD, or global uncertainties could influence the geostrategic landscape. Nevertheless, CleanSpark remains robust, serving as a beacon of technological advancements in its field. Financial stakeholders are demonstrating an openness to adapting strategies as they scrutinize this transformative leader within the industry. A proactive competitive stance enhances CleanSpark's well-established reputation, suggesting that the strategic blueprint holds much promise for the company and its financial progression. As CleanSpark continues to chart its course, the combination of vision and potential sets it up to effectively engage with the opportunities presented in the market. Its operational excellence promises to trigger synergies across interrelated sectors, ultimately promoting financial harmony among key players. Conclusion. Are we witnessing a revival? The story of CleanSpark Incorporated serves as a reflective narrative within contemporary economic conversations. In the realms of Bitcoin mining, self-operated infrastructures, and blockchain readiness, CleanSpark's potential reverberates throughout various financial pathways. Its landmark achievements, such as the operational hash rate and BTC acquisitions, enhance the company's credibility. Positive affirmations from financial analysts and investors serve to elevate expectations for future profitability. As Tim Sykes emphasizes, there is always another play around the corner. Don't chase just because you feel FOMO. This reminder encourages a calculated approach to investing in CleanSpark stock, despite the buzz surrounding it. Observers are keenly monitoring these stock price fluctuations while thorough evaluations of market trends and pertinent metrics promise ongoing interest. CleanSpark is well positioned to continue thriving on its journey towards market leadership and financial growth, innovatively shaping the future of modern markets. In summary, today's valuation illustrates CleanSpark's commitment to achieving financial prosperity, transparency, and growth within the blockchain sector. Trailblazers drive bold visions forward, establishing innovative standards and crafting compelling legacies amidst the evolving market realities. 4. CleanSpark, a rising star in the stock market with 86 RS rating. Is CleanSpark quietly becoming a stock market star while most investors aren't paying attention? Let's dig into the numbers and explore what's really happening behind the scenes, because this is where things get interesting for savvy traders and newcomers alike. First, CleanSpark has just achieved an impressive 86 relative strength (RS) rating, a proprietary metric that rates stock performance on a scale of 1 to 99, with higher numbers reserved for the best price action over the past year. An RS rating in the 80s or above often marks the early phases of a stock's breakout, according to decades of market history. In other words, most market winners showed their strength early on by hitting these numbers. But here's what many people overlook: an RS rating is not just a badge of honor. It's often a valuable signal that a stock could be at the forefront of market leadership. CleanSpark just surged more than 5% above its key buy point of $11.04, emerging from a third-stage base pattern. For newer investors, a third-stage consolidation simply means the stock has previously made significant moves and is now building a new platform for growth. But here's where it gets controversial. CleanSpark is currently considered extended, meaning it's gone above the optimal zone for new purchases. So, is it too late to jump in? Not necessarily. Traders often look for new entry setups, such as the 3-week tight pattern or a supportive pullback to the 50-day or 10-week moving averages, before making another move. These strategies can offer safer opportunities to capitalize on potential future gains. Still, timing in the market is never an exact science. Some say waiting for the perfect setup might mean missing the next leg up. What do you think? Looking at CleanSpark's fundamentals, the latest quarter showed flat earnings per share, EPS, growth, 0%. That might sound unexciting, but revenue growth tells a different story, with sales jumping a robust 63%. Some investors see this as a sign that the company is reinvesting and setting up for later profitability, while others worry about the lack of immediate earnings growth. Which side of the debate are you on? In its sector, CleanSpark is currently ranked 40th within the financial services specialty group. However, the group has several high flyers, including Jiang Group ADR, X Financial ADR, and Finvolution Group ADR, all of which are leaders with top-tier ratings. Does this mean CleanSpark is an underdog with more room to run, or will it get lost behind stronger competitors? Before you rush to a decision, consider exploring more about relative strength ratings and chart patterns. Want to learn how these rankings can power up your investing? Or why so many top traders focus on the RS rating? You can find deeper dives and real-time tips in the related resources below. Now let's open it up. Do you trust the RS rating as a predictor of future growth, Or do you think CleanSpark's flat earnings are a red flag? Should investors chase stocks after they break out or wait patiently for the next opportunity? Share your thoughts. Do you agree or disagree with these strategies? Let's start an honest debate in the comments and see where investors really stand.